When it comes to business financials, profit is often seen as the golden measure of success. After all, it's the figure that tells you how much money your business is making after expenses. However, many successful entrepreneurs and financial experts argue that cash flow is actually more important than profit. While profit indicates your business's ability to generate income, cash flow reveals how well your business can sustain itself on a day-to-day basis. In this video, we'll explore the top 10 reasons why cash flow is more important than profit and why it should be your primary focus as a business owner. 1. Cash flow determines your ability to pay bills. No matter how profitable your business is on paper, if you don't have enough cash on hand to cover your bills, you'll run into serious problems. Profit doesn't always correlate with liquidity, meaning that even if your business is turning a profit, your actual cash reserves may be low. For example, a business might sell products or services on credit, leading to high sales figures but low immediate cash flow. Without cash flow, it becomes difficult to pay for rent, utilities, payroll, and other ongoing expenses, potentially causing operational disruptions. 2. Cash flow keeps the business operational. You can't keep your business running without a healthy cash flow. While profits may reflect long-term success, cash flow represents your business's short-term health. If your business isn't generating enough cash to cover daily expenses, it can lead to an inability to pay vendors, delay payroll, or be forced to take on additional debt. Even a highly profitable company can go bankrupt if it doesn't manage its cash flow properly. Cash flow allows you to keep your operations going smoothly without being stifled by financial bottlenecks. 3. Cash flow is key for growth and expansion. To grow your business, you need to reinvest in it, whether that's hiring new employees, launching new products, expanding your marketing efforts, or upgrading equipment. Without consistent cash flow, it's challenging to fund these growth initiatives. Profit may look good in the books, but unless you have the liquidity to make those investments, your company's potential for expansion is limited. Cash flow provides the necessary funds to fuel growth, enabling you to take advantage of new opportunities without relying solely on external financing. 4. Cash flow helps you avoid debt. Businesses often turn to loans or lines of credit to maintain operations when their cash flow is low. However, relying on borrowed money to cover operational expenses can be a dangerous cycle. While profit is important for attracting investors or lenders, your ability to manage cash flow is essential to reduce your reliance on debt. If you consistently generate healthy cash flow, you can avoid borrowing, which can lead to interest payments and increased financial risk. Strong cash flow gives you the freedom to operate without being tied down by debt obligations. 5. Cash flow is a predictor of financial stability. One of the key indicators of a business's financial health is its ability to generate consistent cash flow. While profits can be volatile, fluctuating based on seasonal trends, one-time sales, or accounting adjustments, cash flow tends to be more stable. A business with a steady cash flow is better equipped to handle unexpected downturns, such as economic slowdowns or sudden disruptions in supply chains. Cash flow stability provides a solid foundation for making strategic decisions, managing risks, and planning for the future. 6. Profit can be misleading. Profit is often considered the ultimate measure of success, but it can be misleading. Profit calculations may include non-cash items such as depreciation, amortization, or adjustments for inventory changes, which don't necessarily reflect your business's actual cash position. For instance, a business may record a profit due to an increase in sales, but if those sales are made on credit, the cash might not come in until months later. This delay in cash inflow can cause temporary cash shortages, even if the business is technically profitable. Cash flow, on the other hand, gives a more accurate representation of how much actual money is coming into the business at any given time. 7. Cash flow enables flexibility. When you have strong cash flow, your business has the flexibility to make decisions quickly and seize opportunities. For example, if a new business opportunity arises, such as buying inventory in bulk at a discount or negotiating a strategic partnership, you need cash on hand to take advantage of it. Without solid cash flow, you might miss out on these chances because you're waiting for profit to materialize. Cash flow allows you to be nimble, respond to market changes, and make the most of the opportunities that come your way. 8. Cash flow supports employee and vendor relationships. Employees expect to be paid on time, and vendors need to be paid for the goods or services you purchase. If your cash flow isn't strong, you might be forced to delay payments, which can hurt relationships with your employees and vendors. Late payments could lead to disgruntled employees, damaged reputations, or lost supplier contracts. A consistent flow of cash ensures that you can maintain strong relationships with your workforce and suppliers, which in turn helps keep your operations running smoothly and your business reputation intact. 9. Cash flow helps manage seasonal fluctuations. For businesses that experience seasonal fluctuations in sales, managing cash flow is particularly crucial. During peak seasons, you might experience a surge in revenue, but in the off-season, sales can drop significantly. Without proper cash flow management, a business might struggle to cover expenses during the leaner months. By ensuring that you have enough cash reserves during busy periods, you can maintain your business operations and avoid financial strain during slower times. Profit doesn't always give you this visibility because it's based on overall performance, not on the timing of cash inflows and outflows. 10. Cash flow allows for better financial forecasting. Accurate financial forecasting is essential for long-term business success, and cash flow plays a vital role in this process. By analyzing your cash flow, you can identify patterns, such as predictable cash shortages or periods of excess liquidity, which allows you to plan ahead. It enables you to anticipate the need for external financing, manage cash reserves, and adjust your budget for upcoming projects. Profit alone doesn't provide this level of insight because it doesn't offer a detailed view of the timing and flow of money through your business. While profit is certainly important for gauging your business's overall success, cash flow is the lifeblood that keeps your operations running smoothly. Without healthy cash flow, even a highly profitable business can struggle to meet its obligations, seize opportunities, and sustain long-term growth. By focusing on cash flow management, you can ensure that your business is financially stable, flexible, and well-positioned for success in both the short and long term. Ultimately, it's the cash in your business's bank account that allows you to continue operating, growing, and thriving, not just the numbers on your profit and loss statement.